Hi, everyone. Welcome to another episode of the LATAM Stocks Podcast. I'm your host, Patrick Flood. Today, I'm speaking with Rupert Mitchell, better known as Blind Squirrel Macro on Twitter. Rupert's an active retail investor with 30 years of experience. He regularly publishes his research on his Blind Squirrel Macro newsletter, and he recently published a really good research piece about his bullish Brazil macro thesis. So I'm eager to speak to Rupert about his Brazilian bullish call, some of his background. So let's do it. Hi, Rupert. How are you?
Hey, Patrick, lovely to meet you.
Yeah, it's great to meet you. Thanks so much for doing this.
Not at all, not at all.
So,
I'm loving that my life is bringing me back to Latin America.
right. So I wanted to ask you about your background because in your research piece about Brazil, you mentioned that you almost joined the LATAM focus team. So tell me about your background a little bit. Where are you from? What'd you do for 30 years working with markets? Why didn't you end up in Latin
Well,
America?
yeah. Well, first of all, to sort of clone Keith Gill, I'm not a furry rodent. I'm a Brit. I live in Melbourne, Australia, but I'm recovering from 25 years in investment banking and other things in Europe and principally Asia. And Asia was where I ended up sort of by accident. I came into the investment banking world. I joined a company called Barings, which is probably quite famous for the one that blew up in 1995. I joined in September 94, and Barings, went bankrupt and got acquired by the Dutch post office, ING, in February of 1995. But I'd studied languages at university and majored in Spanish. And my plan was to join Barings, which had a big emerging market focus, because I thought I would make a career doing investment banking in Latin America. Anyway, to cut a very long story short, I had it all worked out. I was going to be based in New York, where Barings LATAM corporate finance team had an office just opposite Barney's in Midtown. I was going to marry an Argentine heiress, and that was how my life was set out. Anyway, that didn't quite work out. A little man called Nick Leeson got carried away selling options on Nikkei futures in Singapore and blew the shop up. And I was still a graduate trainee at the time in London, learning my trade as a corporate financier. And, while I was still in that training program, hoping to get the nod to go to New York, the entire Latin American business of Barings got poached by what was then called Deutsche Morgan Grenfell. Literally, I think it was almost 80 or 90 people across banking, capital markets, sales, research in 12 countries around the region got poached overnight without a penny of goodwill being paid for that thing. Anyway, so I ended up sort of cutting my teeth looking after emerging markets out of London, and then after the Asian financial crisis, the Hong Kong Monetary Authority had intervened to protect the currency peg, the currency board in Hong Kong, and effectively Hong Kong Central Bank ended up owning 10% of the stock market in Hong Kong, 10% of the Hang Seng. And Barings got hired alongside Jardine Fleming, which is now part of JP Morgan, and Goldman Sachs, because they get everywhere. And I was, because I'd been doing a bit of privatization work out of London, I was on 24 hours notice sent out to Hong Kong to work on this thing. And that became, the beginning of the rest of my life. And so I was the accidental Asian capital markets banker. But, over my career, I did most jobs on the private side of the Chinese wall. I was an M&A guy, a capital markets guy. I then started doing convertible bonds and moved into corporate equity derivatives, moved back to London, by this time with Citi via Salomon Brothers, and did corporate equity derivatives and convertible bonds there. And then moved back out to Asia in 2010 and really spent the last 7-8 years of my career on the sell side running equity capital markets businesses for Citi and then Goldman Sachs.
Okay. So what made you learn Spanish? Did you always have an interest in Latin America? Like, was it business?
I enjoyed languages. And, in those days, the British system's quite interesting. Very few, my graduate trainee intake at Barings was about 30 people. And I want to say at least 15 or 16 had studied modern languages. There's not this thing about vocational degrees, or there wasn't then in those days. I think they took the view that we'll teach you guys finance. Thank you very much. We don't want you coming here with any preconceived ideas of. And so they just viewed, foreign language as a portable foreign languages as a sort of useful skill. They wouldn't necessarily teach you themselves because they're going to teach you the finance part.
Yeah, I think they still do, at least for Brazilians speaking English or any other language, but mostly English is a huge advantage when you're going out for a job in finance. So,
Oh,
so
absolutely.
tell me a little more then about how you approach markets today and maybe what you write about for the Blind Squirrel
So
report.
unashamed generalist, right? And I actually celebrate the art of the generalist. I do believe that people that get too deep into the weeds in a vertical can sometimes struggle to see the forest from the trees. And I think it sometimes helps to come at situations with a fresh pair of eyes. Now, you can often make some obvious mistakes when you come to a new situation, but a little bit of work and a little bit of research should help you identify where those pitfalls might be. And, oftentimes people that are closest to a situation struggle to get out of a funk of bearishness around an opportunity on the bull side. I think, Brazil's kind of a classic example of that, right?
Kick dog syndrome, right? It's been getting kicked for so
Well,
long.
a bit, fool me once kind of thing. It's particularly true when it comes to equity investing in parts of the world where there's been an inflationary backdrop or history. I think that retail and investors generally in parts of Latin America that have had inflation problems tend to be, because they have to be, because, protecting wealth in real terms has to be the first, second, and third priority. So they are focused on real rates, right?
Absolutely.
And are unlikely to get drawn by what is the storytelling business that is equities.
Yeah, but not just real rates, short term too, right? Very
Yeah,
short
absolutely. But do you ever listen to Meb Faber's podcast?
I've seen a few of them.
He had some great guests on there, and I can't remember who he was interviewing the other day, but I think he sent out a Twitter poll to his enormous readership, and they said, "What kind of real rate would you need to earn to basically give up on everything else, give up on stocks, give up, And I mean, in Western terms, the quote unquote correct answer should be, well, if you're getting anything more than 2.5%, 3% real, you should just give up and, go to the golf course, right? Now, obviously, degenerates like me could never give up on, active investing. That would be miserable. But if you've got 6% real rates as a Brazilian investor, it's pretty attractive.
Yep.
Is it, do you really want to swing the bat on Petrobras going from 3 times earnings to 4.5 times earnings
Yep.
versus 6% real? I kind of get it.
And not only is it attractive, it's a huge headwind for equities, right? So it actually makes the equities less attractive.
Well, it is. It is. I mean, the trouble is that it is a fixed income market, right? Where occasionally equities put in just a stellar performance.
Yep.
And I've just got a feeling that one of those moments is coming up. In the note, and if people get in touch, I'm happy to send a copy to listeners of this podcast of the note. I looked at the iShares ETF, EWZ, right?
Yep.
It's been around for nearly 20 years now. So what's that? That is 80 quarters, right? I then looked at a quarterly candle chart of EWZ, right? On something like, I think it was 18 or 19 occasions, it's put in a 20% plus return in dollars, right?
Quarterly.
So, yeah, when capital comes into this market, it comes in a real hurry.
Yes.
And I think we've now got a backdrop from a macro perspective where, one of those moments may come. I mean, I've been really bullish about Latin American equities for 2 or 3 years now. Now, Mexico's been a fantastic winner, but really with the exception of the Petrobras effect, Brazil's been a little bit disappointing, mainly because Vale's been down in the dumps. Investing in red dirt's been not a great game for 2 or 3 years. But I'm beginning to think we might be turning a corner on that front. Just all these individual things are falling into place, and a cheap market in a great currency with a great macro story around it. I think now's the time.
Yeah. Yeah, so let's dig into Brazil a little more. But
Yeah,
before we do, I want to ask you a little bit more about the macro backdrop. You said you think
yeah.
that the Brazil thesis fits into, a global macro perspective, which is how you invest. So could you maybe just give a brief overview of what are you seeing globally? What is that backdrop?
Well, let's take a step back. Right, we are in an inflation transition period, right? And who are the best managers of inflation? Emerging market central banks. And really, the Bank of Brazil, you know, has set the world an example that makes, Western central bankers look like clots, quite frankly. They weren't BSing about transitory 2 years ago.
No,
They
no, no,
went,
no, no.
oh, well, we've seen this movie before.
Yep.
And, they had, 300 basis points on the cash rate before anyone could blink an eye. And if you look at the history of, well, modern history of Brazil's inflation control measures, it's a case study in how to do it. You act hard, you act early, and then you can coast down the wave on the other side of the mountain. And they've done it on repeated occasions. And, the great thing about Brazilian equities is they love an easing environment. I mean, Brazilian equities just get turboed in an easing environment. If you just look at Bovespa against an inverted Selic, an inverted cash rate, I mean, it's almost perfect how that works. I mean, it works more effectively than the NASDAQ.
Yeah.
Now, there has been a massive investment opportunity in Brazil already for the last 2 years. I pointed out in my note that just the returns from carry alone since the beginning of last year have basically nuked pretty much every other investment class on the planet.
Dig in there because I think that's an interesting trade, especially for my readers, for a few reasons. One, because in Latin America, not many people talk about the yen as a funding currency. So it's not common for, Latin American investors to be doing that carry trade. But it has, like you said, outperformed everything. The chart you posted, I looked at it 3 times and, you had a wow there because it was a wow chart.
Yeah,
So
it's pretty incredible.
it's a wow chart. Yeah. So can you maybe just dig in a little more to that trade for the Mexican peso and the real and then talk about why it's been so effective and whether you think now that we're in a cutting environment that outperformance can persist?
Yeah. Okay. So, first thing, it was a great trade and I wasn't on it, right? I wasn't on it simply because I've been pretty positive on the Japanese yen for the last, and prematurely positive on the Japanese yen. I did not see yield curve control carrying on for as long as it has. And I've owned my Japanese equities unhedged, which meant that I've massively underperformed on my Japanese investments, those that hedge the currency hedge that exposure back into dollars. So if you're talking in ETF terms, if you've owned EWJ, the iShares Unhedged Japan Index, versus DXJ, which is Wisdom's Trees Japan, but hedged back into dollars, you've underperformed dramatically. So I wasn't playing the yen carry trade per se, but those were the charts that I put in. There are plenty of people. I mean, the carry trading complex globally is enormous, right? And there's so much nonsense jargon in our industry. Carry trading is very simple. Borrowing in yen costs you nothing, right? And cash rates in Mexico or Brazil, front end cash rates are very high indeed and have been double digits for most of the last 2 years. So you are simply borrowing in yen for nothing, buying Mexican pesos or real, and investing in T-bills equivalent, or the equivalent of T-bills, front month money. And simply doing that and rolling your position every single month has generated literally staggering returns, like 3-4x your money over 2 years. So that's the trade. Now, in the case of Mexico, the equities have performed, alongside. Now, the makeup of the Mexican market is quite different from Brazil. You've got, obviously, both markets have got a lot of banks, but in Mexico, you've got the top of the index, you've got things like the Walmart Mexican subsidiary. You've got a big Coca-Cola bottler. There's a lot of stuff in there that looks a lot different to the Bovespa. Now, what is Brazil? Well, Brazil is the world's friendliest commodity country. And I think we are now finally, after a couple of years of pain and, well, a little bit of excitement at the beginning of the last year and then a lot of pain thereafter, we are moving into a commodity-friendly cycle. And not only does Brazil have tons of what the rest of the world needs and wants, whether it's across energy, whether it's across iron ore, whether it's across agriculture, in an increasingly multipolar world, Brazil has the ability to be friends with China, friends with Russia, and we're friends with the West. And it's uniquely positioned. Now, arguably, there are places like where I live right now in Australia, which, is a Western-friendly commodity country. But, I think the ability of Australia to take advantage of the multipolar world is not the same as exists for Brazil.
Yeah. What do you mean when you say a commodity-friendly environment? Does that mean you're expecting higher commodity prices?
I think I'm not an end of the dollar reserve currency guy at all. You won't find that kind of doomer stuff in my notes, but I do think that we're going to see a gradually depreciating US dollar, which is friendly for commodities. I think that, ultimately hard assets are going to become increasingly in vogue as long duration assets, i.e. at one extreme, unprofitable technology companies come out of favor. And, if we're living in a world where we're operating at the front of the curve, in equity land, you want to be involved in Brazil, right? That is a classic sort of front of the curve market.
Yeah, I definitely agree with you about the importance of hard assets moving forward. Does that mean you expect inflation to increase or reaccelerate?
So this is interesting. So one of the reasons that I was nervous, I've been long Brazil and long Brazilian equities alongside it and for a long time. And I'm always nervous about writing up a trade that I've already got some length in, right? Yeah. Because effectively you're inviting people to join the party that you've already been raging at for a while. Well, with the exception of Petrobras, the Brazilian equity party hasn't really been raging. It's really only just beginning to break out now. The other thing that I was nervous about was that I'm actually very long grains at the moment, so soybean and corn, because on a separate weather pieces the people that follow me can read about, and we're already seeing a very dry start, a dry and hot start to the growing season in Mato Grosso and elsewhere. I think there is a real possibility that some of the crop estimates for soybeans and for corn, particularly second crop corn, could fall way below of where the market is currently pricing. And to me, grains look incredibly cheap. And I was nervous that if Brazil has a disappointing agri year, that might have a knock-on effect on sentiment. Arguably, agriculture is 6.87% of the GDP. But more importantly, food inflation is a big deal in Brazil. And, I'm nervous that, we saw a little tick up in November in food inflation. I'm sure that's the line item within CPI that the Bank of Brazil monitors almost as close as anything else. And so, the risk to the thesis is that food inflation comes back into the system and the Bank of Brazil has to slow down the easing cycle. And, that's the main sort of, the wrinkle in the bull thesis that I've got.
But even in let's say an underperforming agro market in 2024, you still think as long as the rate cutting cycle continues, Brazilian equities
as long as the disappointing harvest doesn't feed into food inflation domestically, that's the point.
Okay, interesting. Yeah, I know fuel prices play a huge part of the food inflation in Brazil too, because everything's trucked. So
yes,
if you get a dip in oil prices, then maybe you don't see the food inflation, or maybe you get food inflation regardless because oil prices go up in Brazil. It's a tough problem. But yeah, I agrry that it's always a balance.
Listen, I think inflation as a global story, I don't believe has gone away fully yet. I'm an inflationista at heart. I don't believe in the 3Ds perpetually dooming. That's demographics, technology, demographic is our destiny. I actually think that aging populations is quite inflationary, not deflationary. But anyway, that's a different economic debate, which we probably don't have right now. I just don't believe that it's fully tapped out of the system. I think that Western central banks are probably easing prematurely, but they don't have a choice.
Yeah, I tend to agree with you. I mean, well, there's never been deflation in my life, right? They call
Well,
decelerating inflation.
no one wants to live in a world of real deflation, right?
Oh,
And that's what the Japanese have been so scared of, right? But
yeah,
at the end of the day, I suspect it's early. This whole mission accomplished out of the Fed last week is almost certainly early,
we'll
but
see.
unavoidable, right?
Yeah. I think you're right. It was inevitable, but
Okay,
yeah,
so but getting back to the macro, so on the monetary side, I mean, 10 out of 10 for the Bank of Brazil.
Hmm,
And what was always a concern, right, for the naysayers was that, you'd have Lula come back and spend like a drunken sailor, right? But guess what? That may have been what he wanted to do, but the constraints of the political system don't allow him to do that. And, on the fiscal side, those deficit numbers, again, are shaming to many economies around the world. And they're only going to improve if we move more into a commodity super cycle type environment.
yeah. So no, go ahead. Sorry. Continue about the commodity super cycle environment you mentioned.
Well, I mean, no, I mean, that was really just a passing comment. I mean, I think that people were worried about the potential for fiscal incontinence with a Lula
Sure.
administration. People were poo-pooing the Petrobras story because they thought it was going to be
Yeah,
renationalized. And,
absolutely.
ultimately that comes down to cutting off your nose to spite your face. Ultimately, that business is such an important source of cash flow for government. You know,
Right.
yes, it has been mismanaged in the past. Yes, there's been corruption in the past, but Brazil sort of weathered through that. Everything you read about Petrobras going back sort of 2 years, the dividend's going to get cut. They're never going to, it's all valued on the basis of cash flow from the dividend. And, you know, well, actually, it's worked out as a fantastic story.
Yeah, I mentioned I
Everyone's missed
mentioned
it.
I mentioned my interview with Federico Nobri, and he used to cover Petrobras for Reuters. So he used to
Yeah.
go there to their office in Rio when he was working there. And he told me that like that was his biggest point of his Petrobras calls. There's really been changes at Petrobras. It's not the same company it was 10 years ago. There's real compliance now. It's a professionalized company. Does the government still have influence? Of course, but the way they do it is more professionalized, more in line with international standards. So yeah, I agree with you there for sure. So let's see. I noted here that, I hear you on the bullish Brazil call. I'm a Brazil bull, obviously. I've lived there for 12 years. But but the market's been cheap for a long time, right?
Yeah.
So do you think a catalyst is necessary to kick off the bull market? Like is a rate cutting cycle to say a 8 or 9% terminal rate on the Selic and still 5% real yields, is that going to be enough to really kick off a bull market in Brazilian equities, or is there another catalyst that you think is necessary?
Well, I think ultimately the Brazilian market has traded like a commodity stock for the last couple of years, right? And there are lots of frustrated bulls in commodity equities everywhere, right? There have been selective stories that have worked. But, look at the XME ETF. It's up 10% in the last week, right? People are buying stock in companies that dig stuff out of the ground right now. There is a clear shift in sentiment towards that kind of business. And if we are in a weakening dollar cycle, EM will come back into favor, or international first, but then EM where there's growth coming back. We've got the sentiment surveys turning back up in Brazil. You've got a staggering carrot in terms of valuation. I put a Morgan Stanley chart in my note, which was a regression analysis of price
Yeah.
to book versus return on equity. Trailing ROE for Brazil is in the early 20s, right? And it's trading at less than 1.5 times book. Well, on 1.5 times book, right? And there are a lot of stocks that are a lot cheaper than that. You compare that to India, right? The current darling of emerging markets.
Yeah.
And India's trading ROEs barely into the teens, and it's trading at nearly 4 times book. That looks like a horribly crowded trade to me. And, when you just think about how narrow the door is in Brazil, I can see this repeating its trick. I can see Brazil having one of its 20% in dollar terms quarters, which it's done on 20 occasions since 2000.
Yeah, I agree with you. And I think people don't talk about how deep the Brazilian markets are. There's a lot of money in Brazil, like you mentioned earlier, but it's just sitting in the overnight rate. So if you start to get the animal spirits going, you start to see a real bull market because foreign equities come in, there's a ton of domestic money that'll pour into equities too.
Listen, I think I can't remember if we talked about this pre you hitting recording or not.
Yeah.
It's always the danger of having but ultimately, I think Brazilian retail investors are amongst the most savvy on the planet, right? And for very good reason. They think about short end, front end fixed income, first, second, and third. And there are also other things like infrastructure bonds and other sort of tax efficient investments that can make fixed income look even more attractive for certain retail investors. At some point, they will come in, particularly when they see the foreigners coming in to chase the equities. Yeah. And, it's not just relative valuation, because relative is, it's a mean reversion trade relative valuation. But in absolute terms, Brazilian stocks are trading well below long-term averages on a price to sales, on an EV/EBITDA, on a price to earnings, price to book basis. It's well below the average, and no one has been in the trade. One of the things that I like to look at is to look at the shares outstanding in country ETFs. To see, you just take the price out of the equation. You just look at which ETFs have been accumulating assets under management on, and look at it and analyze it on a share basis. And essentially, a ton of money left Brazil at COVID, and it hasn't come back, right?
Yeah.
And to my mind, it's just a matter of time. And I don't know to what extent you lean on technical analysis, but if I look at a weekly chart of EWZ as a proxy, right, it looks like, it has broken out. It's broken out of that downtrend in the last few weeks.
I look at the BRL denominated chart since I have, but yeah, so the BRL chart.
But you need to think like a gringo, Patrick.
I know. I look at both, but so in BRL it did break out to an all-time high, and then someone gave me that exact pushback. Said, but in the dollar it hasn't. It's touching its high from 2014. Like it's right there.
It's actually broken out of the longer downtrend line now, if you look at the weekly chart in dollars.
Yeah, for sure. So as part of the research piece, you actually published a Brazil basket of ADR stocks that you're owning.
So just to pat my audience, I don't make the assumption that my readers are all set up to trade domestic stocks. I tend to try and express my trade ideas in something that anyone with an Interactive Brokers account can put on,
which is a unique challenge, right? Like I think about that too. It's a unique challenge, right? When you come to an investment idea, try and express it.
And I will get the usual comeback about, well, you've put the Petrobras ADR in your basket. Why didn't you put the A shares? It's got a better dividend, etc. Yeah, I get all those arguments, but I try and keep this as accessible to as broad an audience as possible. And anyone that understands the different types of snow, like Eskimos sort of classic snow, the different types of exposure you can take to a Petrobras, is probably not reading me for my Brazil insights, right? They're already sufficiently in the weeds. So, this basket is pretty straightforward. It's an equal weighted basket of Petrobras, Vale, Brasilagro, Suzano, the pulp and paper business, and then on the financial side, Bradesco, rather than Itaú, just because it's a cheaper second place, and then two fintechs, New Holdings and PagSeguro. It's an equal-weighted basket. Now, based on their current indicated yield, that basket will throw off a cash dividend of around 7.2%. And then as an overlay, because I typically add some kind of option overlay most of my trade ideas, I have levered that view around 20% quarters in Brazil and twinned. So for every 10 units of this basket, you buy 1 unit of a call spread out to next June on EWZ, the ETF. Now, it's got a super liquid option chain. And for a $35 by $40 call spread on EWZ, which you pay about $1 for what you paid last week, about $1.50 for, you get that $5 spread if Brazil puts in one of its 20% money through the door quarters. And that would turn, if Brazil does 20%, you've got 20% on your basket and plus your common dividends, you would gross up the total return, incorporating that call spread, to 43% on the overall package, which is not a bad 6 months' work.
No,
if it
not at
works.
all. It's honest work. It's honest work.
In terms
So
in terms of it, the individual names. I mean, you've done an entire podcast on Petrobras, so I'm not
sure,
gonna talk
sure.
about that. I mean, at the moment there is obviously crude price has been absolutely in the gutter, and the Petrobras equity has massively outperformed the crude price in the last few months. So that's probably something to keep an eye out on.
Yes.
There
Actually,
might
so
be some.
let me ask you a little more about Valley then, because you mentioned earlier that you think there's a clear shift to investors liking companies that pull things out of the ground. So could
Yes.
you talk about that shift towards maybe mining stocks that you're seeing and a little about what you like about Valley?
Yeah, I mean, I wrote a piece earlier on this year. It was entitled Confessions of a China Reopening Bag Holder, right?
Hmm.
And, I was guilty of being over optimistic about a China reopening post COVID. But fortunately, my expression was largely through energy, and I was not heavily involved in the iron ore trade at all. But I'd actually not been involved in any of the iron ore majors. So I put Rio and BHP on that list since the summer of 21. The chart of Vale doesn't look dissimilar to the US dollar chart of Brazil right now. And I suspect if Brazil's going, markets are efficient, it's because that overall trade. And we mentioned what's happening to the metals and mining ETF in the last week. You've got the Japanese coming in and paying a huge price for US steel. Things are happening in the physical world, and Vale itself looks like it really wants to break out of this downtrend. And I can't imagine a Brazil basket not containing it, quite frankly.
Sure, sure, sure. What else is in there then? The other
Brasil
sector,
Agro.
yeah.
Brasil Agro is a small cap, really. I mean, it's only a $500 million market cap company, but I'm a massive ag fan. I think that we are
I love it. It's a fascinating industry. I'll talk to you. Yeah,
absolutely. I'm slightly obsessed with agriculture as an industry.
I am too.
It's something I'm constantly doing work on. Brasil Agro, as I mentioned, I've got big grain bets on elsewhere in my acorn, as I call them, portfolio. And, they are largely predicated on this risk of a disappointment on the soybean and corn crops in
sure.
Brazil this season. But, I tell you what, if they pull off another bumper year, Brasil Agro is going to be just fine. Right. So it's kind of a hedge against what I've got elsewhere in the
Okay.
book. And I make that clear. I'm less clear what I think about the protein world right now, which is why JBS isn't in there.
Okay.
But otherwise, it would probably have that in there. Suzano really is a global company, right? And where we are, if you look at, pulp and paper is just a wonderful cyclical industry. And if you just plot Suzano's dollar price against, corrugated recycled paper, you can look at the Fred database for that. You can see we've just had a big turn up in the paper cycle, and alongside a supportive broader Brazilian equity market, Suzano should do fine.
Okay. And what about the sectors you didn't include? So there are some ADRs that are, payments, there's education, there's some more pure tech companies. Is there a reason
So,
you didn't just
the basket's missing a consumer play, really. If you, apart from the financials, I think you get quite a lot of the consumer through the fintechs and through the bank holding. I did consider Arcos Dorados and Mercado Libre as possible, but it's not really a pure Brazil story. What is it with Arcos? It's what, under 40.
2020?
I thought it was 38 or something like that in terms of revenues.
It's by
but,
far their most important market, but it maybe, I don't know. I want to say 50, Brazil 50, everything else, but I haven't looked at it in a while.
And that's similar with Mercado Libre, right? I think that's more Brazil in Mercado Libre than there is in Arcos. But ultimately, was people want to do that, they can do that anyway. Ultimately, I find that people take my baskets as a starting point,
sure,
rather than an end game. Candidly, I looked at the Arcos chart and I just didn't want to chase it.
Yeah, I like the company a lot, Arcos. So I own International Meal Company, which is the
Yeah.
master franchisee for Pizza Hut and KFC in Brazil. And I
Right.
don't know, I have an affinity for the ugliest duckling, I guess. So when I bought it, it was a turnaround story. It got absolutely destroyed coming out of COVID. It was like a private equity monstrosity of all these strange assets around Latin America. So they're getting it organized. They restructured the debt and it's in a much better place. But I own that instead of Arcos. But if I didn't own that for a fast food company in Latin America, I'd own Arcos.
Nice. And then PagSeguro is a little bit of a fallen angel situation, but it's the real business with real earnings.
The
It's
payments are
cheap.
tough though. I got asked about the payments. PagSeguro is a little unique in the sense that it's connected with Mercado Libre. So they have this
Yeah.
whole internal economy for payment processing.
Yeah.
But most of the gringos miss the Pix development in Brazil. So Pix
Yeah.
is this global bank, instant free payments that's debit. So it's cash to cash. So there's really
Yeah.
no need anymore in Brazil for the little card machines. Those are dead. The question is when. So I don't want to be like Stone or Cello, where my core business is payment processing on these little card machines, because I don't think that's a thing in 10 years.
Yeah. But at the same time, you're not paying for promise, right? If you're
Yeah,
invested in a firm or Upstart or Block right now, you're
you're
paying
fine.
a multiple on 2035 cash flow right now. Whereas here, you're paying 7.5
Oh,
times
that's
earnings. I
fair.
mean,
That's fair.
7.5 times forward earnings, 1.3 times book. I mean, you've got margin for error. And if Brazil's going up, PagSeguro is going up
It's going
too.
up. It's going up. Oh, all the ADRs are, because a lot of
Yeah.
people are going to look at Brazil going up and then they're going to look at the ADRs, and there's not that many of them, right? There's
Yeah.
30, 40 maybe. So
Exactly.
if you
Exactly.
really want to pay that thesis, you can go buy the 20 million market cap. There's a couple small Brazilian ADR tech.
Yeah. I mean,
If you really want to.
yeah, then we're in tip sheet territory.
And now we're
There'll,
talking pay. Now we're talking
there'll,
pink
there'll be
slips.
others. I mean, I may be a macro tourist, but I'm not doing Brazilian small cap tips. That would be too much.
Nor am I. If I do, I'll write it up in detail, but I'm not. I didn't say the ticker, but there's one that came to mind that's a 20, 30 million market cap. It's tiny. And if you want to talk about the capital coming in, it'll be an ocean through a fire hose.
Yeah, exactly. Well, I think you get enough of that at the level of the market, right? I mean, if you think about it, I find it staggering if you look at where these major indices are compiled. Brazil is 55 basis points of the MSCI ACWI, right?
Unbelievable.
Unbelievable, right? My home country, the UK, is at 3.9%, right?
I saw that chart you posted. I had this thought too, where it's like, I realize markets aren't political weighing machines, right? Or they're not measuring strategic importance to global humanity or anything, but like next to it was like Saudi Arabia, also at 0.39%. It just feels like certain countries, their equity market relative to their global importance, the global economy is so underweight. Brazil and Saudi Arabia,
Well, I mean,
examples of it.
ultimately, there's been, in the post GFC world, there's been one game in town, and that's
Yeah.
been large cap US tech, right? And so much of the skew has really been through that effect right now. And perhaps they carry on powering ahead, but ultimately, well, the European Union is getting pretty fed up with them. There is so much of their growth really now is coming from financial engineering, and they're just massive cannibals. I mean, Apple, case in point. And looking at where these stocks are trading on an earnings yield relative to real rates, I mean, at some stage that train's got to run out of steam.
So
Particularly as we started the conversation, if we're moving into the world where you need to be much closer in on the duration spectrum.
tour with this idea. You mentioned the mining stocks. I'm assuming you follow some of the major miners. Do you think that's a valid way to play your Brazil thesis, is to maybe buy some of the junior mining companies on the TSXV in Toronto that are Brazilian assets, Brazilian companies just listed abroad?
I hate junior miners as a general rule.
Me too.
I've been fully invested in this uranium thesis this year, which has been great. Now, a lot of the uranium juniors are listed down here in Australia.
Yep.
They can't help themselves. One of the big ones this week, one of the big juniors, a company called Alligator Energy, they did a life-saving capital raise the other day, just to keep the lights on. And then they announced on Monday that they were buying a copper recycling business. I mean, it was just instant fuera out. I'm just not dealing with that. frankly, most of these junior miners, they only produce one thing, and that's new issuance of shares as a general rule. And the big boys are so cheap, right?
Yeah.
You're going to see big liquid names that are massive underweights in global investment portfolios with none of the governance risk, none of the nonsense risk. Yes, there's more torque and there's more gearing to a junior, right?
Yeah.
But I can replicate that with options. I'd much rather own a out of the money call option on Vale than some junior ore at a junior ore miner at a lower valuation.
Yeah, I think you make a great point that why bother sifting through all that junk when you can just buy Valley?
Well, it's just dealing with the extra risk, right?
Yeah.
I mean, look at the option chain on Vale, right? If you want to take an aggressive levered exposure to the iron ore cycle, do that on Vale or Rio or BHP.
Great. So this was awesome, Rupert. Fascinating conversation. Is there anything we didn't cover about your Brazil thesis?
Well, if there's something, I'll come back if you forgot about something. I'm
Fair
happy
enough.
to come back.
We'll do a follow-up. We can do a follow-up if anything changes.
Well, I mean, we should probably do a report card in 6 months' time to see if we have one of those 20% moves.
We'll do it. It'll be some.
If not, why not?
It'll be the small cap ADR that's up 200% that neither of us own for sure. So give the audience a send off. Tell them where they can find you, where they can sign up for the macro report.
Right, absolutely. So first of all, find me at blindsquirrelmacro.com. I'm also on Twitter. I still call it that. And my handle is @squirrelmacro. I write a free weekly letter. That letter comes in two parts. The front section is free, and I hope to keep that free for as long as I can. That goes to a few thousand people every week. The individual trade write-ups, which I call acorns, just go to my paid subscribers. But the weekly note is a standalone product in its own right. It's not just a massive advertorial for the paid service. I wouldn't have any patience for that as a consumer myself. And the podcast is on all of the podcast apps, Apple, Spotify, Blind Squirrel Macro, the pod. And that is based on the weekly letter. It's never longer than 10 or 12 minutes. It's a quick listen. And I hope quite a lot of fun. I'm trying to have fun and enjoy sharing my tourism around asset classes. And I do everything from fixed income, currencies, commodities, equities. And and my trade ideas, I try and focus on mispriced tail risks, right? So if a market is pricing something that I think is a 20% probability, but it's being priced like a 5% probability, I'm like a moth to a flame with that kind of opportunity.
Nice. Well,
and I see that in Brazil. And I see that in Brazil right now.
All right. Well, the Brazil thesis was great. It was really well done. I enjoyed reading it, and all that will be in the show notes, the link to the report, your Twitter page, and everything. So thanks so much for doing this, Rupert. I appreciate it.
Patrick, anytime.